Good morning. Today is Wednesday, January 8th, 2014. Here, as promised earlier, we start with our equity segment where I talk a little bit about the Nifty, Bank Nifty and the macro levels of the individual stocks that we will be tracking in the coming few trading sessions. Also a brief roundup of the currency and the commodities complex will also be coming. Hope you enjoy our presentation and we request your continued support and subscribe to our YouTube presentations. My name is Shiv Kumar and coming from www.akshayashiv.com or Lotus Advisory Services. The first segment today is towards the Nifty and equities trading. The new year has begun on the equities on a very sober note with mild downside. Last 5 trading sessions has seen small downside of 10-20 points but accumulating from the highs of closer to 6350 to below 6200 as of now. Spot Nifty yesterday closed at 6162 and the Nifty futures at 6192. Nifty hit a low yesterday of 6140. Now 6130 to 6140 to 6150 has been the supports that we've been talking about in the past couple of days. It broke below that but then regained a little bit of marginal strength mainly on account of some strength in the bank stocks to regain the 50 to around the 6200 mark and closed at around 6192. Our view is that so long as it sustains below 6200, there is weakness and gives us a shorting opportunity. Immediate resistance on the spot Nifty is at 6230 and in futures at 6260 and support at 6130. As 6130 gets taken out, we could look to levels of 6080, 6030 and 6000. Now on the upper side on a positional basis, only a close above 6300 will confirm a positive trend where all shorts need to be negated. On the downside, a close towards 6000 would give fresh buying opportunities. Overall, the market seems to be on a bullish and an uptrend. These kind of small intraday or small corrections on the downside are bound to happen and it's very difficult to trade on such days when small downside corrections are bound to happen. Anytime a rebound could happen. Now the trade could be hence seen between 6000 to 6300. Above 6300 and at 6000 buying opportunities should arise. The Bank Nifty, as we gave in our edition yesterday, broke below the support of 11,050 and tested lows of 10,890. So long as it remains below 11,050, we could see shorting opportunities and it remains weak. Now, a break below the low yesterday of 10,900, the next support would be seen at 10,500, which is likely to be tested on the days to come. On the upside, 11,200 is a resistance where all shorts should be exited on a close about 11,200 to 11,300. Overall, on a macro level, Bank Nifty seems to be on a weaker wicket than the regular Nifty. Of the third composite index, which is the CNX IT, which closed at around 6,590 yesterday. Overall looks most positive among the 3 sectors. Support is at 6,500 and resistance at the 6,700 to 6,730. Now, how do you trade the equities? Overall, the Nifty is trading the zone that I have mentioned below. Wait for breaks further below support of 6130 for initiating fresh shorts or sell on rises at 6210 to 6220 with stop loss above 6260 for fresh shorts. Keep booking intraday as carryover trades is not suggested. Bank Nifty gives a fresh opportunity for shorting so long as 11,050 is not broken, whereas CNX IT gives buying opportunities with support at 6,500. We talk about the individual stocks now. The sectors to be watched out, of course, are the defensive tech sectors on pharma and IT. These two look most positive. Banks, better to avoid them. The earnings on the Infi are expected on Monday, 13th January. So all eyes would now be focused on the earnings season of the third quarter. We expect the third quarter earnings to be fairly muted. No major surprises are expected. But of course, any stock can spring a surprise once in a while and hence you need to watch out. Catch those stocks that are at a 52-week high and let it consolidate, break down a little bit for fresh buying opportunities should be the strategy that should be adopted for the first quarter of this year, especially since the impending elections would keep the markets on its edge and wait for its outcome before a clear, decisive outcome is obtained. Mid caps and small caps are the sectors that you need to watch out for buying opportunity. Among the individual stocks that we have been tracking for the past month and invested on to all our subscribers, as also for the future trading sessions, are Aban Offshore is a share that we've been tracking from around the 330 levels. Hit fresh high of around the 430 yesterday. Resistance could be targeted at 450 to 460 and support now is below 410. On a positional basis, there could be a potential multi-bagger with a double bagger, and hence one should watch for the buys on tips as far as Aban Offshore is connected. Amar Raja Batteries over the last 12 months has gradually gained in strength from the 220 to 230 levels to around the 330 levels. Hit a high resistance a month ago at around the 360 mark, now trading sideways and correcting. Buy on dips would be strategy at around the 300-310 levels for positional trade of a 20 to 30% upside for the current financial year. Arvind Mills is another stock that we've been tracking for the past few trading sessions. It has gained in strength from around the 85 levels to hit a high of 156 yesterday, now trading at around 153. Positionally, it seems to be on the charts on an overbought zone. So traders know fresh longs are suggested. Buy on dips would be suggested for an immediate target of 158 to 165. The immediate support or stop loss for traders holding buy positions will be around the 148 levels. But buy on dips is recommended on Arvind Mills for a target of 162 to 165. Positionally, this stock is on an upswing. And buy on dips at around again on corrections to around the 130 to 140 mark for positional targets of 170 to 180. Even a target for this year of 200 to 220 cannot be ruled out. Aurobindo Pharma has gradually gained in strength over the past 6 months from around the 200 levels to above the 400, now consolidating at the resistances at around 413 to 415. Could target positionally 435 and 450 with immediate support now seen at 380. Buy on dips is recommended on this stock. PF Utilities, another stock which has rose sharply over the few trading sessions. Now trading, it is closing on the upper circuit for the past couple of days. Again, closed at around the 610 mark, likely to target in the days to come 640 to 660. Buy on dips is recommended. It has grown sharply from around the 350 levels about 45 days back to around the 600 levels. Seen a strong upswing. Seems to be on an overbought zone, but of course there are buyers to lap it up, and the sector is doing pretty well. And this is another stock that needs to be watched out. Biocon is strong, consolidating. Positionally, it seems very, very strong with a stop loss of around the 350 mark, likely to target up to the 500 to 510 in the positional basis in the months to come. CEAT is the next stock that we are focusing on. It has risen sharply from the levels of around 150 over 6 months back, now to the zone of around the 360 to 370. A potential multi-bagger. Immediate targets could be seen at around the 400 to 420 mark, and support is now seen at 340. Dhanuka Agritech is a stock that needs to be watched out. We have been recommending buys for the past 2 months from around the 160 levels, now trading at around the 190. Initially, briefly last week, it hit a high of 216 and now correcting and trading at around the 190 to 200 mark. Watch out for this stock and buy on dips and accumulate for a positional basis. Among the others, mid-cap stock, Kalindri Rail is one stock that we've been focusing on for the past month from around the 62, 63 levels. Hit a high a week ago at around the 82, now consolidating at 77. We expect some kind of stocks to be announced in the upcoming vote on account by the government of FDI opening in the rail sector, and it could target 100 to 120 in the days to come. The next stock that one should focus on is Ranbaxy, a hugely corrected stock, an underrated stock, could be the dark horse in the pharma sector, and it has potential and the legs to go, now trading at around the 460 mark. It could be a potential winner for 2014. Another stock that we have been focusing on is Spark or Sun Pharma Advanced Research. For the last 1 year, it has gradually risen from the 90 to 100 mark to around the 170, 175 levels, now trading at around the 163, 164. Spot the stock for 2014, 2015 for a potential multi-bagger opportunity. Keep accumulating on an SIP basis on every day. Swen Life Sciences trading at around the 74, 75 mark with a stop loss of 60, and focus on this stock for 2014 for a potential multi-bagger opportunity. Tata XLC currently trading at around the 410 to 415 mark. This stock has gone up over the last 12 months from 150 to around the 400 mark. Even this stock can be accumulated on an SIP basis with stop losses below 350 on a monthly accumulation, or on any correction you can buy the stock for a potential target of 500 to 600 for this current financial year. Among the consumer stocks, Tata Global Beverages can be accumulated at every dip. Currently trading sideways for the past few months at around the 155 to 165 mark. Buy on dips at around the 140 to 150 mark, which is strong support zone for a target of 200 to 220 in the potentially on a positional basis. United Phosphorus has been doing very well, and it's gone up from around the 130, 140 mark over the past 6 months to around the 200 mark. Buyback has been approved by the board at 220, and this stock has got the legs to scale new highs in 2014. Among the steel stocks, one low cap stock that we've been tracking is Usha Martin. We have been buying from around the 25 levels, currently trading at around the 33. It could be a potential winner in 2014 in the first half, and we recommend a buy at this stock. Among the other stocks that we would be watching out are PVR and Inox. In the segmented industry, Inox could target up to 160, 180 to 200 during the current financial year. PVR currently trading at around the 640 could target 700 to 800 in the next few months. Motherson Sumi, Voltas and Cummins and Crompton Greaves are some of the other stocks in the capital goods industry that we are tracking. Among the mid-cap pharma stocks, Lupin is another stock which we feel could be a potential winner with targets in the near future of 980 to 1020. Tech Mahindra in the IT industry could be the dark horse, and Tata Communications buy out every decline as far as. Now, we would be going into the individual stocks in the next and upcoming segments, which we request you to follow for our individual trading ideas. Now, as far as currencies go, currency futures now trading at around the 62.60 mark. As far as US index, dollar index has been gaining in strength over the past few trading sessions. Now, as far as we see strength in the US dollar index, the emerging currencies markets are expected to weaken further. In the coming days, we see 62 as a strong support in the US dollar INR futures trading zone, and it could test levels of 63.30, 63.80 and 64 in days to come. So watch out for weaknesses in the INR in the days to come, even as the US dollar gains strength. We now talk about the individual commodities. Today, on Wednesday, the FOMC minutes of the last meeting are expected to be announced. As this would give a further insight on the commentary as to what the outlook is as far as stimulus programs are concerned and tapering in the months to come, especially in the upcoming FOMC meeting later this month. Janet Yellen was officially nominated and has been taken in as the FOMC chairman yesterday by the US Congress. Now, as far as commodities complex concerned, we talk about two segments. One is the intraday trades for today and the weekly calls given by us on Monday morning. On the weekly calls, I will be giving a small wrap-up. Crude, we have given sells from around the 5,900 levels, hold sells as per targets given of 5,800. 5,810 is a strong support. Yesterday hit a low of 5,835. Even in our intraday sells at 5,890, we had achieved our targets. Now, next upside can be seen only on above 5,900. Our next weekly call is buys on natural gas. Buys were given at two levels with an average of 271 with a stop loss below 265 for targets of 274 and 276. High came and achieved the target of 276. Resistance is at 278. Next upside is on a break above 278 and support is seen at 264 to 265. Copper, we have been on the sell side on the weekly basis. Yesterday our intraday buy stop loss got triggered, but on a weekly basis we have been on the sell side, sell at around 468 with stop loss above 461 for lower targets will be below 464. 464 is a strong support that we've seen. Yesterday it was consolidating on a narrow band. Nickel, we had given sell call, sell at 860 for targets of 840. T1 has been achieved. A break below 840 could see T2 of 830. On a weekly basis, in dollar terms, we had given sells in gold and silver. These targets have got achieved. Gold, we had given sells up to 1250, hit a high of 1244 on a weekly basis for targets of 1220 and 1210, and hit a low of 1227 yesterday, currently trading at around the 1229 mark. We had given weekly sells of silver at $20.30 for target of 20 and 19.7 with stop loss of about 20.50. Target 2 achieved at 19.7 yesterday. Lead, zinc and aluminium have been trading sideways on a weekly basis. Now for intraday purposes, gold is trading in a zone of $1225 to $1240. Next weakness can be seen on a break below $1225. On the MCX exchange, it trades weak below 28,800 to test 28,600 with current resistance at 29,030. As far as silver dollar, it would remain weak on a break and sustain below 19.7. It could test initial supports at 19.5 and further that below at 19.3. Current resistance is seen at 20 and 20.05. On the MCX exchange, closed at around the 44,500 mark. Looks weak to test 44,000 and 43,700 with resistance above the 44,800 mark. But of course, weakness in the INR could further drag it, could push it up higher, although in dollar terms we could see weakness. Copper intraday range bound in the zone of 465 to 470. Weakness could come below 464 and minor positive if it sustains above 470 to 471. Nickel, we have explained, further weakness below 840 to test 830, and lead is weak below 134 to test 132 to 131 with resistance above the 136 mark. Zinc strongly holding above the 126.80 to 127 mark. Weakness could come in this counter only below the 126.50 mark. Crude could take support at around the 58.30 to 58.50, closed yesterday at 58.52. Next downside would be on a close below 58.10. Gas trading highly range bound in the zone of 267 to 274. Next move on break and hold of either side. Further updates and daily intraday calls can be given in our website at www.akshayaship.com. Please visit our Facebook at facebook.com/Lotus Advisory Services. Have a safe and profitable trading day. Our next photo shoot and update could be given during the course of the day and followed up with another update tomorrow morning. Have a good day. Thank you.